they're going to continue to kind of inflate this bubble, as you said. What are some potential pins that could, stop them? I mean, can they just get away with this, you think, each acronym? Or do you think there's something that could cause, the deflationary bubble? People are looking at China right now. They're really afraid. People are looking at recessionary indicators coming out of Europe. And there's always kind of these fears. They're going, oh, this can't continue. But at the same time, 2023 has been, pretty good. They've gotten that, so-called soft landing, so to speak. I don't really
Yeah.
believe that we're going to get that, but we have kind of experienced that so far to date. What are some potential pins that could kind of stop this, everything bubble in your mind?
I mean, we have at least a dozen that I can see that are out there right now. And I think, you mentioned China slowing and the Evergrande situation. I think it was today I saw the head of the Evergrande Bank is now like under police custody, which is interesting on its own. That's a China story. But like if anybody gets successful enough, like the Alibaba founder,
And
then
Jack
like
Ma.
like Jack Ma, then like the police kind of like come and take him. So like, what's the incentive for people to build big businesses in China? But that's a whole different story. But I think there's the Evergrande situation. There's another one, though. The Zhongrong is a much bigger story. There's a potentially $500 billion hole that could cause in the Chinese markets. But the bigger problem is I think it's actually the U.S. exposure to that. That's an even bigger problem. And then where I just think, and these are just potential pinpricks, but like obviously we're in a very adversarial situation with Russia and China, specifically China. China, was at the BRICS meeting in August, and President Xi and the leaders from China that were there were recommending nations to start trading their own currencies, to drop the dollar in their currency trade in their trading. And he also said that he wants the BRICS nations to be able to rise up and challenge the G7. So it's a big shift. It's no longer a collaborative. It's now a competitive landscape. He said we need to rise up and challenge the G7. I think that was pretty big. And then he didn't go to the G20. He's like, screw you guys. I'm doing my own thing. Good luck, right? And now Biden went to the G20 and basically challenged the Belt and Road Initiative. He said, hey, all you nations in Africa, forget China and their Belt and Road Initiative. Come work with us instead. And so now we're starting to see this like adversarial world. And so like potentially this is a pinprick that could be out there. Xi and the PBOC or the CCP looks at this Zhongrong situation or Evergrande situation and says, this is going to cause way more harm and damage to the U.S. than it is China. So just let it happen. Why do we need to bail it out?
Can you explain the Zhongrong situation a little bit more? Like, I think people are very familiar with Evergrande and what's going on there, but maybe not a lot of people are familiar with the Zhongrong situation.
Yeah, I sure can. I did a video on it just a week or two ago. Let me just pull up my notes. I can give you some specifics on it. So it's basically a shadow bank. Without looking at my notes, it's a shadow bank in China that was meant to be in like the wealth management area. So lots of wealthy Chinese citizens have given them their money. But really it turned out to be like an FTX style Ponzi scheme where they were basically taking all of this money and instead of putting it into like wealth products where they'd, be in bonds and treasuries and, companies, things like that, they were literally just taking it just like FTX and using it for their own speculative bets. But because there's like no transparency and there's really no regulation in China for a lot of these big companies, they got away with it for a really, really long time. And now, just like with FTX, they took the customer funds, they traded in their own speculative bets, and they pretty much lost all the money.
Wow.
And estimates are that the hole is somewhere between 2 to 500 billion. We don't really know because there's no transparency. And the Chinese regulators are so far behind the ball on this that now they've stepped in and they're trying to figure this out. They're trying to regulate it, trying to kind of rein this in. But from what I've been able to uncover on my own research, they haven't really been able to figure out the total size of that. But we know that there's lots and lots and lots of U.S. liability to that. And so that's where it sort of looks like if that goes down, it could be a bigger problem for the U.S. financial markets than it would be for China. Like most of the Chinese people don't invest into companies like that. It's the U.S. that puts the money into it, and it's the pensioners that have their money into that, right? And so that's sort of the high level without trying to pull up my notes on it.
No, that was helpful. I mean, 500 billion, that's a big hole. And then whenever there's leverage, there's always interconnectedness, right? There's always contagion. that can kind of trickle back into the U.S. financial markets as well.
So that's one potential pinprick. I mean, there's a bunch of them. There's landmines everywhere. I think another potential pinprick that we're seeing, and something that I'm picking up on, is there's this battle really between multiple factions. As Bitcoiners, we've probably all heard a million times, Bitcoin will never succeed because they will never give up control over money. But who are they? Is it the Jamie Dimon and the New York Fed doesn't want to cede control of the dollar to the ECB and euro? Or is it the PBOC, or is it the BOJ? Like who are they? Like nobody wants to give up control over money. And so we sort of see this warring faction going on. Evident. I've been talking about this for about a year now, I think, but it seems to be becoming more and more evident, where you have basically the Fed and the Treasury are at odds here. And the Fed is trying to, it looks like to me, trying to restore some strength back into the dollar. And it makes sense, right? Like Jamie Dimon and the New York Fed, depending on what your views are on the Fed and the banking structure, and that's a whole nother rabbit hole to go into, but they don't want to give up control over the dollar. They want the dollar to remain the currency. They want to be able to print that as long as they can. And so they can't just go, which is why they've turned down some of these calls to fund like this GOP, 26 climate bill of what they want $150 trillion. And it was June of 2021 when Jerome Powell told Christine Lagarde after they got out of the meeting, he's like, look, we're not printing that money. We're not giving that to you. Our mandate is not clean or green energy. And you can see that today. It seems like they're trying to kind of restore some sort of balance back to the US dollar, but the fiscal, the Treasury, the fiscal side is spending like crazy. And so I think that battle could continue to heat up, and maybe and this is another talk about the Fed, but I think the Fed paused right last month. And I think what I'm thinking is that they realize, or Jerome Powell realizes, like most of this inflation is out of our control. It's coming from oil, right? And like the energy markets are out of control. There's nothing we can do. No, we can't reduce demand enough to offset that. And then the other thing is that it's not you and I spending the money. It's the fiscal spending that's causing the problem, and they can't stop that. But it seems like there's like this power struggle to do that. So anyway, that's another potential pinprick that I could see happening as well. I think as far as everyone's talking about the commercial real estate mortgage, like 2.9 or $2.2 trillion in commercial real estate mortgage-backed securities that are mostly with regional banks. That's a big problem.
Yep.
For me, I'm like, man, I've already seen this game before. We saw it in 2008. We saw it in 2020. The Fed just says, give me those bonds. I'll just stick them over here and I'll make you whole. Now, a lot of those regional banks could go under because of this. And that's kind of what we talked about earlier. So like, that's a big deal in the longer term. That's going to continue to restrict credit. So that's like a big long-term deal we have to worry about. But in the short term, I don't know if that's going to crash the markets. I think that's just like a bailout that's happening. So anyway, there's a couple.
All those things could be like the inflationary recession, like you mentioned as well. Like, if the Fed can pull on its interest rate lever, but it's not going to stop these other problems like the fiscal spending, like you mentioned, and like oil. Oil just topped like $94 a barrel. It's headed towards 100 right now. That's going to throw a wrench into the Fed's inflation fighting mission. And so you have these factors, and the other one is wages. You have all these strikes everywhere, and I don't know if you have any thoughts around that, but you have these, the auto union are on a strike right now, demanding 40% increase over 4 years in wages. You have the SAG-AFTRA strike. That's 150,000 workers right there. You have I just saw one that was like a culinaries union that went on strike today. And so you're seeing all these labor strikes. And I saw another chart that said workdays lost due to strikes or walkouts topped 4.1 million, which is the highest since like 2001 and over 20 years. And so what do you think about like this inflationary recession dynamics here? And could we be in this like plateaued situation where inflation plateaus like around 3%, 4%, well above the Fed's 2% target, and they decide to stop because they're like, okay, we're just going to wreck things in terms of financial stability if we keep raising interest rates, and we can't control these other factors?
Yeah, so that's basically what I just said, right? I think this pause sort of signals that where like they're like, hey, we can only crush demand so much, but this inflation, and as I've been saying this for a long time, as lots of other people have, it's not a demand side. So you have cost push and demand pull, right? Two types of inflation, which is kind of ridiculous, but that's sort of how they measure it. And it's not coming from the demand side; it was more coming from the supply side. And so if Saudi and OPEC wants to bring the supply side of oil down, the Fed can't lower demand faster than they can bring supply down. If they can make, as I said, you and I broke, but if it's the fiscal spending, and to your point, some of these things, this is what happens when the money's broken. Obviously, right? And when they increase the money supply under the Austrian term, that's inflation, inflating the money supply. The effects of that are, prices going up and all these other things, society breaking down, but also people striking at the auto workers striking. And so, is this going to be recession? Like a deflationary crash or inflationary crash? Or the way I look at it is, in the United Auto Workers, for example, they're asking for a 40% pay increase. So, and then they want to reduce their hours to 32 hours a week. Yeah, me too. Let's all do that. Sounds great, right? That's worked out so well for France. But if they want to do so, that's what they want. So if you're a business owner, you understand this. If your costs go up by 40%, then you have to bring your sales price up by 40%. So is that inflationary? We know that the Fed has been specifically trying to target unemployment, right? They wanted to put about 2 million people out of work to try to help bring that inflation down. But people making more money, wages going up is a problem for them. That's inflationary. So, man, you increase wages 40%. That's highly inflationary. Now the cost of cars have to go up. That's highly inflationary. Now, we could argue the other side of it, Sam, which is, well, then less people buy cars. We could say that this is really bad for the auto workers because now there's going to be all these days destroyed. As you said, they're losing lots of money. But again, we already know the government bails out the auto manufacturers all the time. They look what they did with GM back in 2008. Obama did, right? So I look at this all as inflationary. I'm an inflation bull.